Hi everyone, welcome to Tuesday. And like we do every Tuesday, we take a look at the performance of the main board for the New Zealand Stock Exchange, which of course is the NZSX 50. Now, before I jump across and share my screen, just that housekeeping that it is for educational purposes only, definitely not intended to be personalised financial advice. If you are looking for personal financial advice, you do need to go and have a chat to your own financial advisor. However, if you are looking for education and ways to improve your own trading and skills, definitely reach out to me. I'm happy to happy to answer any questions you may have on the share market, or of course, if there is a share you would like me to take a look at, let me know and we'll definitely do a video in the future on it. Right, let's take a look at the main board for the New Zealand Stock Exchange. Okay, as you can see here, that's what I've got up is the NZSX 50 gross index. And look at this for last week. It was quite a huge week. We had $258 million worth of shares traded last week, and unfortunately it was down. So that gives us 3 weeks in a row now where the market has fallen. And the big thing to look at is this volume down here. It is growing. So like I said, $258 million worth of shares traded last week. The week before was 176, and the week prior to that was 43.2 million. So that is growing. What that is indicating to me is that there are people out there that are very nervous and they are cashing out of their shares whilst they can. They've probably seen their shares, individual shares that they own, come off from recent highs, and this is where they're thinking that there could be a lot more sinister things about to happen, so let's get out whilst the going is good. When I look at this last candle, if I zoom in on it, you can see that above that main body we had quite a strong wick and a very small tail at the bottom. So what that is actually indicating is that definitely the sellers were in control. They were the ones driving the performance last week. So when you look at a candle, and if it's a red candle, that top solid line is where the market opened. The wick at the top is where it traded for its high during that week, and the tail at the bottom is where it traded at its lowest point for last week, and the solid line is where it closed. So you can definitely see that there was very little buyers because of that low tail, but a lot of sellers in there. So they were the ones really trying to drive this market. Now let's put on our moving averages and just take a look. So like normal, I always use the 30 exponential, and there you go there. You can see that last week has definitely started trading below that 30-week moving average. So that to me is another negative. 2 weeks in a row is a negative, but also when you see a market trading below its 30-week moving average, we definitely want to stay out. Let's also put on the 15-week and see how that compares. I zoom in, you can see here that 15-week moving average has started to trend downwards as well. It hasn't crossed through that 30-week moving average yet. However, that could well happen if this trend continues, what we're seeing. Now, I do not look into the reasons why. I mean, we probably already know there's the war going on. There's a lot of uncertainty out there. However, I just purely look at the charts and see what the charts are telling me. And like someone said to me a little while ago when they were listening to media reports and that sort of thing, my belief is that the charts will actually show you if things are going to happen before it comes through in the media. And that's what I mean, is you'll see that the charts here are saying, let's stay out of the market. And that is sometimes before the media starts getting on board. You'll also see recoveries actually start to happen before it starts being reported on in the news. And that's where the charts will actually tell us. And you'll start seeing things like positive weeks, and you'll also start seeing those moving averages turning up. So that is purely why I look at the charts, because that is real life. That is what's happening. Because if you know me, I do not buy into the hype. I keep well away from media reports or barbecue advice and things like that. I purely look at what these charts are telling me. And at the moment, they're saying stay out. Let's take a look at the 1 year and just compare that performance. And here you go. Here you can see that moving average, so the 15-day moving average crossed through that 30-day at around the 9th of March. And since then, it's just been trending down. And if I look at the volume on a daily basis, look at that for Friday. That is a heck of a lot of volume. It's a really strong bar chart. It certainly supersedes pretty much anything else for the last year or so. So that's why you need to keep an eye on these charts and see what they are actually telling us. Let's go back to that 5-year. And I'm just also going to put on an average true range. And I always use a 21 period for that. Okay, so if I take the average true range down the bottom here is saying over the last 21 weeks, because I've got it on the weekly candles, and it's saying that on average, the main board for the New Zealand Stock Exchange, you could expect it to move around $269 every week. Obviously, there's going to be overs and unders, but that's on average. So what I will do is take that figure and I'll divide it where the price is at the moment. So at the moment, it is quite interesting. So even though we've seen quite a bit of sell-off, the market's only showing just over 2% volatility. So that part is okay. But these moving averages are saying stay out, proceed with caution. Now, that's not to say I have cashed out of any holdings that I've got. I'm using my stop losses, and they are actually taking me out of the market if something sinister should happen. And in fact, it's quite interesting. Over the last couple of weeks, I've only had one of my holdings in the New Zealand market that has been sold because of those stop losses. The rest are still running. Some are actually getting close to reaching new highs, in which case I'll then be moving my stop loss up. So it is quite interesting that there are still individual shares out there that are still doing okay. So don't go and blindly sell your shares is what I'm saying. Make sure you've got stop losses in place to protect you. If you want to learn more about that, by all means, reach out. I'm happy to help you out on that. Now, I'll just stop sharing. On Thursday, I thought I would go and revisit a share that I have done a lot of reports on previously, and we haven't looked at it for some time, and that is Spark. So come back on Thursday and we'll take a look and see how the performance of that has been going. Just remember, if you do want any help with your trading journey, reach out. I'm happy to help. Take care.